Hello, everyone, and welcome to your Daily Five for Wednesday, September 13th. I can't believe we are already in the middle of September. That's just crazy. Anyway, I hope everyone's doing well. Today, what I like to take a look at, by the way, I'm Leslie Jouflas of Trading Live Online, and I do these segments a couple times a month for stock charts, and I really enjoy doing them. If you'd like to send me a question, if you have any comments, here's my email, and here's my website. Today, what I'd like to talk about are where are the stock indexes headed. And we're going to take a look at the SPY on a monthly chart today. We're going to look at the Dow Jones Industrials using the YM contract. That's the futures contract for the Dow Jones Industrial. We're going to look at the Nasdaq, and I'm also going to look at Intel today, and we're also going to take a look at IWM, the ETF for the Russell 2000. So let's get right to the charts. So here we are on a monthly chart of the SPY, the ETF for the S&P 500. A couple of things that I was looking at, let me share those with you. So here, let me spread this out a little bit so we can actually see. So here we see that we have this move to the upside out of this breakout area right here. Let me just put a line across that so we can use that as a reference point. I'm just going to put it right about in here. You can see all the clustering of these opens and closes in here and the breakout above. So that's where I'm going to place the line. So we've had a couple of months of a nice move to the upside. And then in August, this is the candle. This is called a hanging man candle, but it's not always completely bearish. So we need some more information. And I'll show you what I'm looking at that we can monitor. The reason it's considered a bearish candle, a bearish pattern. But if you consider, and Steve Nissen talks about this, that the price went all the way down here. The bears pushed it all the way back, and then before the month closed, the bulls were able to push the price all the way back up and close here. Now I noticed that the real body is inside of July's candle here. So I think that the open and the close of these two candles is going to be very, very important. And so I'm going to mark that with a line as well. Just put that right across there. Okay, so now we have a bit of a range here of support and resistance. And there's other support and resistance areas, but we're just going to look primarily at this one. So here, this is the RSI, Relative Strength Index. So let me kind of squish this up a little bit, move this chart up so we can see some more data. It's one good thing about seeing a monthly chart is you can see a lot of the price history. So this is what I noticed on the RSI. Where this green line is here on this decline, this is where the RSI found support. And what I did was I took this line and I extended it back. So I'm going back quite a bit in the history of the RSI with this price data. And you can see all of the points of this level on the RSI that were both support and resistance. So you can see that. So we had support back here. We had resistance back here, broke above the resistance with this move up, came back down, tested that support, made this low. See how it just kind of hovers around that area. So this is going to be a very important level on the RSI to watch if we see a move to the downside that really gets going. So, well, where is really gets going? This line right here, I think breaking this line with a strong candle to the downside or a bar, whatever you're watching, is going to be a very negative signal if the RSI also breaks this low with it, because that would be breaking a support level on the RSI and indicating a move further to the downside. Now that's mapping out a stronger move to the downside. So what about if we don't see a stronger move, we just see a little bit more of this correction? Well, then I would like to just be looking at some fib level retracements. I'm going to go from low to high on there. And notice how after this run up all the way back from, about a year ago, October 2022, where this up move started, several months of going sideways, the breakout to the upside. Notice how the 382 retracement is coming back, right around into this big strong candle. Let me move this a little bit more. And you see the highs of these candles here. So right around in this area, and here we've got our line across here. I feel that on just a a little bit more of a milder pullback, this is where we're likely to see support come in, and maybe right around to the 0.50. I don't think I'd like to see it go much further than that, especially with long bars or candles down, because that would really be breaking where this support level is, where the price hovered around these levels for several months. So I'm going to be monitoring the price action. Now, as far as this candle goes, let me tell you a little bit about that. Um, since it's here, if this candle was down here, it would be a very bullish candle, especially if price closed above it, it'd be a hammer. But up here, it's a hanging man. So if the price were to exceed these highs here, where we have this resistance line, there would be a strong bullish signal. However, getting below this low right here, because you have this very long wick here. Remember, this is the bulls that pushed it up, so all these bulls are going to be wrong right below here. So that's another level that we want to be watching as a support level. So I'm going to put that in right there. And also that level right there is coming in right about the halfway, almost the halfway point of this big candle. So in Japanese candlestick theory, oftentimes right around the 50% of a large real body such as this, there's very little upper wick and lower wick on here. So that's the kind you want to see. About 50% is a support area. Actually, the entire real body is, but oftentimes the price will find support right around the 50% level. And of course, below here, because of the nature of this candle, would not be constructive for the market. So we have a number of areas to watch right now. Now, if the price just stays within here and goes back and forth, then we'll be forming a nice range. But remember, up above here, and we're talking about closes, not just a push intraday and back down. We're talking about some closes. Above this level will be bullish. Back here will be bearish, but support below. As far as the RSI goes with this, notice how on this rally to the upside, the RSI only got to the 60 level. That's not extremely bullish. But it is a monthly chart. It's longer term, of course, than some of the other charts that had a higher RSI reading with this push to the upside. Now it's turned down with these moves. So again, this is the important support for the RSI. If prices break here, and we're likely to see the RSI head down towards that support level, and we want to be watching that closely. Let's take a look at the Dow Jones using the YM contract for the futures. And so this is an interesting, I think, interesting chart. There's a few things going on. I've already got some, this was resistance, and then tested it as support, came back below again. However, this pattern that's forming right here, I've drawn this in This is a Gartley sell pattern. So if the price stretches up a bit more to here, even to here, even up here, it's still going to be a sell. This is going to change if the pattern. If it gets this far, it'll be a butterfly sell pattern. But a little bit more up on this, and this pattern will complete right here. There's a lot of resistance, as you can see, from a few months ago, and the RSI on this rally again has not really been all that strong. So my feeling is that we're really more likely to see a little bit more down than up right now, and we've got to monitor the price if it starts to decline by watching those support levels and how they react to price. That's going to be very important. So we've got a Gartley sell pattern that's just about completed right here about that 35,440-ish level right in there. So now let's take a look at the Nasdaq. This is a weekly chart of the Nasdaq. This is a futures chart. And I've got some Fibonacci levels going in both directions. So one is from high to low retracement. You see the market retraced up to just about the 886. And from this low to this high, this is the retracements on the way down. Now, what I'm seeing, again, using the RSI, right here, the RSI has turned down slightly with these last couple of days. And this is a support level for the NASDAQ right here. And I think, again, watching the RSI, if the price starts to decline, and the RSI breaks this low, I think that we're going to see some lower prices. Now, if we kind of extend back on this chart and look at the history of this RSI, we're going all the way back. Let's go way back. Hang on just a second. Let's see if we can squish this up just a little bit more. Oh, I lost my line on that one. Well, back into, let's see if I can get this just a bit more. Okay, I had to fool it a little bit. So I had to draw in another line right on top of this RSI and then extend it this direction. For some reason, the one I had wasn't extending all the way. So we're going all the way back to the 2000, 2001 technology crash. And we can see how this level in the RSI, again, if we extend that all the way forward, this has been a level that the RSI has tested many times over a long period of price data. So it is right back here again. And again, see how it just slightly turned down here. We break this RSI and we break these lows, and I think we're going to see a retracement from these lows in 2022 up to the highs 2023 and see a move back down. But that might end up forming, don't panic, because that might end up forming a nice, just going to schematically put this in here, not measuring it, well, a potential ABCD buy pattern back around the 382, maybe to the 0.50 retracement. So that's what I'm watching. And again, same thing as before, above this high, and that is likely to be a pretty good bullish signal as long as we see some closes above there. Well, several weeks ago, I included IWM in one of the daily 5 segments, and I was saying that there is a seasonal window coming up. It's still not quite here yet, but we have a nice sideways range pattern that's been forming, and a breakout above this resistance right here will likely lead to a strong move up. It might get some testing around there, but I think we'll see it move a bit higher. It's been in this range for quite some time now. Breaking below here is not going to be healthy. And I think it's going to be an indication that there's something going on in our economy. The Russell can be a bellwether of some of the companies, small cap companies, which do a lot of business in our country, and that's why it's considered the bellwether. So, but a break above here, and that will probably be good news for our economy. Now, I just want to quickly include Intel. This one I've been following for a long time. It had a break of a long-term support. Down here, you can see that. Move to the downside. Big sideways range with a big ABCD buy pattern. A little bit of a move out and back in. Formed another buy pattern. And now it's been, up out of that range. It came back and tested. Came back and tested here. Another ABCD buy pattern. Now here, this has been marked in for quite a long time. So it hit this point as resistance, which I think is expected because that was a pretty big move to the downside. But Intel is showing strength, and I would be watching this for pullbacks and watching this as a support level, a risk level. This would also be a risk level. And then, of course, these lows here, going below these lows would be very negative for it. But I would be keeping an eye on Intel. It looks like it's trying to work its way up higher, but it's got to get through some of this resistance. So thanks very much for watching, and as always, I try to look for comments or questions and do the best I can to answer and reply to you. But thanks for watching, everybody. I'll see you on the next Your Daily 5.